Hello and welcome to another update video about ADA Cardano. We take a look at the Cardano cryptocurrency chart from an Elliott wave point of view. If you are interested in learning more about Elliott wave, what that method is about, how you can use it to trade cryptocurrency charts, and how we can use it to forecast charts, make sure that you subscribe to the channel. We take a look at several cryptocurrencies here every single day. And yeah, what is it about? I mean, Elliott wave helps us to understand what the key turning points are on charts. It helps us design trades. It helps us understand what is the roadmap currently for a chart, but also, and that's even more important, I think, what are the levels that tell us when the roadmap breaks, when the market is starting to deviate from that roadmap, because these are the actionable levels that traders or investors can actually use. Now here on the ADA chart, on the daily time frame, you can see that we are still holding above support. And as I mentioned in the last few videos, as long as we're holding above that 64-cent level, the yellow scenario seems to be leading. Yellow and white are both short-term bullish roadmaps. That means we're looking for higher prices, and they both don't really differ from each other until the next high is formed. So when the next high forms, which would be here yellow wave 5 of yellow wave C, okay, a C wave has 5 waves, 1, 2, 3, 4, 5, or it's white wave 3, a substantial price top should form. Now in the yellow scenario, that might mean we go to new lows. We will have to talk about that when we get there. But in the white scenario, it could also be a really strong correction before we go even higher. But again, you know, if we take a look at this white wave 4, which would be part of that white, even more bullish scenario, well, it would typically have the same duration as wave 2. So we talk about roughly like 6 months, maybe 5 to 6 months. I mean, again, it still means that the next high, when it forms, could be a substantial one. So that's the first thing that we know. We also know that we're still holding above support, so we're still watching for higher prices. Now that might change with a break below 64 cents, but for now, this is the focus. And then we also have the next upside targets to watch, specifically because the third wave here reached nearly the 123.6 Fibonacci extension. The next upside target I'd like it to reach is at least $1.72. Better would be $2.36. And further upside extensions are always possible, but that is what I'm watching for. So the focus is still on higher. Obviously below 64 cents, that focus will shift, but we're not there yet. And then when we look at the smaller time frame, the 1 hour time frame tells us that, well, we could be range bound here for a while, I have to say. What I've added to the chart here is this kind of triangle pattern, because the market is moving down in 3 waves. 3 waves in Elliott wave language is always corrective, which means normally when we have a 3-wave move down complete, we will check if the market can break out to the upside. So ideally, we're looking for the next piece of evidence that the uptrend is continuing, like a 5-wave move up. But the next rally, as you can see, was only in 3 waves, which means probably this correction is going to continue a bit. And it might mean that we go down like this and test the support area before we go higher. It also could mean that we are forming a triangle pattern like this before we go higher, okay? So it means that we still have to be on the side of caution here. Ultimately, what it means that the levels, the price levels, the Fibonacci levels, they remain more important than the actual microstructures we're tracking, especially when we're dealing with corrective patterns, and 3-wave movements are corrective patterns. So it takes the first upside impulse to tell us that a low has been struck. We don't really have that at this stage. We may have an impulse from this low. This is quite an aggressive move up. From an Elliott wave point of view, that would be a 5-wave move up on the micro level, but it hasn't really followed through to the upside. That's the problem. And then from the last swing low, this is also not clearly a 5-wave move up. So I'm watching for the market to give us further evidence that a low has been struck. Overall, I'm watching for higher prices as long as we're holding above 64 cents. I'm considering a triangle pattern. A test of the support area is, you know, we still need to consider it, but the 64-cent level is the level that distinguishes between bullish momentum and bearish momentum. So don't be surprised by more consolidation here. But a break above $1.04, the last swing high, and a break above the $1.15 level, this 7th of January high, would suggest we're starting really to go higher and we follow the yellow count directly higher. At the moment, in the short term, I think we need to be flexible. Yeah, that's the update about ADA. Hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you really like the content, then please check out the channel membership. Thanks a lot for watching. Bye-bye.